I mean, great to have you this morning. Let's just talk about the news out of the EU. It's a familiar pattern, perhaps, where there is this new measure that would target things like app store arrangements, companies bundling their own services or privileging their own services, making the messaging systems open to one another. Do you think any of this is a threat to things like Apple's App Store?
Yeah, the elements of this that could be an issue for Apple, right? So we have a sort of an in-depth report out today on Apple, and our take is, listen, the worry you have on Apple is regulatory across different geos. And the part you really worry about, I think the two things that regulators can go after them for is, one is, essentially asking everyone to use the Apple payment to make the App Store payments, right? Do you force a breakup of that, the Apple payment versus the App Store fees? I think the Netherlands is doing that. South Korea is trying to do that. The question is, what are the economics going to look like after that? And can Apple still charge you a fee irrespective of what payment mechanism you use? That's one set of issues. The other one, I think the regulatory one that's fairly sizable is the Google ad revenue that Apple gets, a really good check, $10, $12 billion to ensure that Google is the default search engine on all our devices. Those are the two things, regulatory-wise, that I think you worry about for Apple.
And then in terms of your kind of refreshed outlook on the stock and your valuation, new target up around, $200 a share, it would seem that it's this combination of, somewhat steady but modest top-line growth, share buyback, some M&A, a little bit of margin expansion. It seems like a consumer products company. I think that's how it's maybe come to be seen. Is that worthy of the kind of valuation that we've now given it, right? It's more at a premium multiple, and you're talking about $10 in earnings in 4 years, so it's 17 times 2026 numbers. You think the market's going to accept that?
So far they seem to be accepting it fairly well, right? But I think you bring up a really good framework, right? I mean, I think the way you described Apple, I would sort of agree with, right? It's a mid-single-digit, high single-digit revenue growth company, very consistent. EPS should grow low teens as you go forward. But you kind of said this consumer staple. I'd say it's something between a consumer staple and a high-end luxury goods company. And if you look at those two buckets, Apple is actually trading on a free cash flow basis at the lower end of the valuation metrics. If you can get to the higher end or the mid-range of these metrics, this is a bull case scenario. Our price target is $210. But the bull case, if you get to the high end of those high-end luxury good models, it's a $300 stock in the next 3 years. I think that's the ultimate upside you can have from Apple if they can execute on this model with more consistency and less volatility than what folks have seen in the past.
Speaking of consistency and less volatility, there's a report out of Bloomberg, which I'm sure you've seen, about Apple working on a subscription service to smooth out its revenue and make it more recurring. How does this change the equation in terms of valuation here? Does it achieve what you're looking for with regard to making Apple less of a hardware multiple? And how do you think the math actually works? Because based on the reporting, it doesn't appear that it's going to be in exact installments over a 12 to 24-month time period. It's just going to be a fee that consumers would pay over a significant amount of time. So how do you think that actually would change the game for Apple?
Yeah, I think Apple has been trying to do one thing, which is how do they convince people to reduce the replacement cycles of their iPhones, right? It used to be 2 years way back in time. It's gone close to 4 years today. And what Apple's trying to figure out is how do I reduce the replacement cycles, right? One way to do it is through innovation, incrementally harder to come by. The second way to do it is actually putting people on the subscription model, right? To your point, it's unclear what the advantage would be for you and I as a consumer to do it compared to what an AT&T or iPhone upgrade program offers to you. But what Apple could achieve out of this is, one, reduce the replacement cycles of the iPhone, make it more predictable. Secondly, make this a much more recurring business. And so, to your point, make it a lot more consistent operating business model than the massive volatility that we typically get around iPhone cycles.
Shepard Smith here. Thanks for watching CNBC on YouTube.